one thing I was trying to tell people is that you got to understand that taxes are an incentive system by the government. It's an incentive to do what the government wants you to do. So when you do things the government wants you to do, you get rewarded, right? Because anyone that operates in the employee, quadrant of life, and you operate as an employee, you get taxed the most because you're not doing what the government wants you to do, right? And when I say doing what the government wants you to do, I'm saying they want you to provide things for society. They want you to contribute to society economically, right? And so if you're just an employee, you're not really contributing to society. You're just contributing to yourself whenever you go and get a job, right? That's all you're really doing. So whenever you are operating as an investor or a business owner, you operate on a different tax formula, right? And because the tax code is 77,000 pages, but a majority of those pages, very few of those pages show you what to pay, and most of them show you how not to pay. But the thing is, most people don't operate as a business owner or investor, so they don't get to take advantage of those other ones, of how not to pay. So as a real estate investor, you know, it's different if you're doing flips or rental properties, right? When you're flipping houses, you don't really get many tax breaks besides, the deductions for your expenses, which is significant. But that's any business. Any business gets, whenever you you pay taxes on your net income, everybody, right? But as an employee, you don't have many deductions to take advantage of. So you're just taxed on your gross income. But as a business owner, you're taxed at your income, right? Minus your expenses. So when you're flipping houses, you have your income, you deduct all your expenses, which could be your rehab costs, it could be your traveling costs, it could be, meals that you might have spent, it could be, subscriptions that you have, it could be, property costs, holding costs. All those things are considered expenses, right? Holding, title fees, all those things. So you subtract all that in your tax based off of that. Not you don't. That, I mean, that's not much of a tax break in that aspect. But the biggest tax break comes from actually owning rental properties. And so when you own rental properties, like I said, you're doing what the government wants you to do. You're providing homes for people, right? You're providing housing for people. So the government is like, hey, we want to incentivize you to continue doing that. So we'll give you tax breaks in the form of depreciation, which is the number one tax break that real estate investors get. Whenever you own rental properties, residential real estate, you can essentially deduct the value of the structure of the property, right? So if I don't have a property, if I have a piece of real estate that's worth 100,000, and the property is worth, or the land it sits on is worth 20,000, and the structure itself is worth 80,000, according to the county tax assessor, then that means I can subtract the structure of my land, and subtract the value of my land, and I can depreciate the value of the structure over 27 and a half years for residential real estate. So that, I know it sounds complicated, but just think about it like this. If I have property worth 100,000, structure 80,000, and or a property worth 100 and the land worth 20, that means the structure is worth 80. So if I take 80, divide that by 27 and a half, I think that's like 2,300. That's $2,300 a year that I'm able to claim as an expense, additional expense. So if I had a property I was making $200 a month in positive cash flow, right? Like I said, that's usually what I aim for, $200 a month per unit. So if I have a single family house making $200 a month, that's $2,400 a year. So if I have that property's worth, 100,000, and I get that $2,300 per year tax deduction, I get to now from that 2,400, I get to deduct another 2,300, right? So now I'm only taxed on $100 of income for that year, as opposed to getting taxed on that $2,400 of net income, right? Because now because that depreciation is essentially a paper loss. It's not a physical loss you're taking, but the government allows you to take that paper loss in the form of depreciation. So now that's why a lot of real estate investors pay nothing in taxes. They pay absolutely nothing in taxes because of depreciation. Because now when you scale that to, 100 million or a billion or 100 billion, you can make a lot of money, but the depreciation is massive. So that's probably the number one. There's so many tax breaks. We're not gonna get into them, but there's so many. That's probably the number one.
That's pretty dope. And with the tax rate, can you just to go subtract the whole bill at once of the house, or has to do it like over time over 27 years?
Sorry, repeat that.
Can you like subtract the cost of the house, such as depreciation taxes? Can I just take $100,000 depreciation taxes in 1 year, or I do it over the 27 years? Of 2,300, 2,300.
Yeah, so it would have to be over the 27 and a half years. So it's different for different industries. Like they call it Section 179 depreciation, and then there's bonus depreciation. So that was one of the things that got introduced with the 2017 Trump tax bill was you can for certain things like for vehicles in a business or something, you can deduct the entire value of that vehicle in 1 year. But for residential real estate and commercial real estate, you can't necessarily do that. And I wouldn't necessarily want to do that because you want to be able to take advantage of that every single year. I don't want to have to pay absolutely nothing in taxes 1 year and then pay, taxes later years. I mean, yeah, you can always carry it over, and that's essentially what would happen. But you know, yeah. So, but to answer your question straightforward, I mean, you wouldn't really be able to take the entire $80,000 depreciation up in 1 year. I mean, unless you're making $80,000, which you're obviously not making $80,000 a year off of a single family house, then there would be no point in trying to do that. But yeah,
That makes sense. That makes sense. So, what are some books and research that help you so far in your journey as an investor?
I listened to a lot of podcasts, Bigger Pockets, real estate podcasts. I read a lot of their books. That was really probably the main sources of my real estate education from Bigger Pockets. That podcast and then a lot of their books that they put out. Are really good for people looking to get into real estate as well, just because it teaches you a lot of the fundamentals and the basics.
That makes sense. And what are some challenges have you faced to get to this point of success where you're able to see a property and like, okay, this is a flip, compared to when you first started?
I think you know just at this point, I mean, now it's just about trying to manage, different aspects of the business. But there's always, challenges now at this point, just with growing and doing more, you get more money is more problems in most situations. But you just have to really, kind of just learn how to handle them. You just learn how to handle them up front. I mean, I just lost some money on a deal that I'm closing on Thursday. Lost like I think 15 to 20,000, maybe 10 to 20,000 on that one. It happens. Even I'm still losing money. I mean, I'm doing different things, so that's the reason I lost money is I'm not. That doesn't necessarily mean other people would lose money that way. If you follow, certain I deviated from something I usually do. That's why I lost money. But I don't necessarily think that's a challenge to me. I don't really see that there's any challenges in the business right now. Everything that happens, even if it's what people would consider a failure, it's always a learning opportunity to get better because with every deal you learn something and you get better.